Welcome back to the Dividend Diplomats YouTube channel. You've got your boy Bert. We're back in the flesh.
Boom.
The wolf pack is here, and we're talking to you about dividend stock purchases this past week of October 11th.
Before we get into the purchases though, smash that subscribe button. Give us the thumbs up on this video. Everyone, thank you so much for your support as we continue to grow our YouTube channel. We continue to buy dividend growth stocks, help us find undervalued dividend growth stocks. Everybody, thank you. We love your comments and feedback too.
Now, we appreciate it. Bringing out the coffee mugs.
Yeah, what's that, Lanny? Check below if anybody's looking for their own Dividend Diplomats coffee mug, because yeah, now that we crossed the 10,000 subscriber mark, we were able to open up our own store so you can get some Dividend Diplomats merch, and finally one of those Dividend Diplomats coffee mugs.
I don't know about you, but this coffee just tastes better in this mug.
It always does. It's because you sip the freedom.
You sip freedom. So welcome back, guys. We're here to talk to you about the dividend stock purchases. Bert and his wife doled out some capital. We put out some capital in our house as well. A lot of these are going to be some consistent weekly stock purchases we make. But also, Bert was buying stocks on his watch list. If you haven't caught that video, check it out.
And Lanny bought a surprise stock that wasn't on his watch list, but one that we've talked about over the last few months here and there.
Throwing haymakers. You know, we're investing obviously in dividend stocks because we want to achieve that financial independence, financial freedom through dividend investing because, hey, dividend investing provides that great source of dividend income.
That's very easy too, because you get the dividends when you're sleeping. You open up your brokerage account, they're there.
You're
you
awake.
check. Yeah, it could be. It doesn't matter when, they just come in, and then you get the increases. You get the notification. You check out Seeking Alpha, and all of a sudden, boom, you received a 5% increase. You received a 10% increase, or holy smokes, I even got a 20% increase and a special dividend. What the heck is going on?
Or you can just check our Twitter page where we post pretty much live feeds of what dividend stocks are doing by ways of increases, stock plummets, stock purchases, Bert eating chicken wings, and Charizard Bert.
Yeah, or Lanny making pasta too. That could happen.
Hey, it happens. It happens.
It happens.
Hey,
but
hey, you take it easy.
All right. I thought we put that one to bed a while ago.
Never.
All right. So what happened in the market this week? Because this was actually a pretty fascinating market. We opened on Monday at around 4,400. And it was not a quiet week, that is for certain. On Monday and Tuesday, as everybody knows, the stock market dove down. It dipped below 4,350 as concerns started bubbling up, as you know. But then, Lanny, what happened towards the end of the week?
I'll tell you what, Wednesday, Thursday, Friday, you had pretty much 3 straight strong green days. Great alternative band right there. But the S&P 500, you thought were going to break below 4,300, but instead they broke above 4,400.
Yeah, now they're almost at 4,500. It closed at 4,471. So the market was actually up 1.45% this
Not
week.
cool, S&P 500.
No, so a lot of our purchases that we had and we're going to discuss were front-loaded towards the first half of the week when the market was declining, trending towards that 4,300 before it made that pivot and went upward.
That's right. I mean, and if you haven't caught some of the videos, Verizon video we put out there, because that stock price was plummeting quite a bit to the point where the dividend yield actually began exceeding 5%. And that, we haven't seen that type of level in quite a few years for Verizon.
Yeah, no, so stay tuned, everybody. Check that video out to see why we liked it then, and maybe stay tuned for a little bit longer to hear the surprise of, did we actually buy Verizon? You'll find out.
Verizon. But Bert, what we did do and what we do know is, what did you and your wife do on that consistent weekly investing?
Yeah, we kicked off the week by buying 1 share of Johnson & Johnson each. It was at the higher point this week of 161.57 for myself and 161.72 for my wife, adding $4.24 of income each. And then in total, $8.48. The usual, just the practice swing. We go up there, buy the 1 share each of Johnson & Johnson. It was nuts, though. Johnson & Johnson hit the high 150s once again, though. We didn't buy any more shares, but the price is in a great point, and we're liking what we're seeing from J&J. Maybe we will start sprinkling in a few extra shares if the price hangs around here.
Maybe you can consider, this is just us talking here, but maybe putting a limit order at like 158, 159, so if it ever hits it,
yeah,
it just triggers that next purchase.
Yeah, no, absolutely. So those were our weekly purchases. Again, Johnson & Johnson, 1 share per week each. We got it in the low 161s. Lanny, what was your weekly purchase?
Sure, of course. Obviously, big on Vanguard. If you haven't seen it, check out all the other videos. Check out the blog. But my wife and I, we invest into Vanguard's high dividend yield ETF, VYM. I know, bring on the comments, because I know you guys think there's another certain ETF that's better than VYM. It's all about personal preference there.
Hey, we talked about that though. We compared VYM to SCHD too, and both were great. We said both were great when you just picked a strategy with VYM, so back off everybody. We know they're both two great ETFs.
But it's interestingly, on Monday, October 11th, I didn't just purchase my usual 3. In fact, I'm purchasing 4 shares. So I'll be purchasing 4 shares going forward on a weekly basis for Vanguard.
There it is.
That's right, kicking it up a little bit, only because there's a certain few things that happen from a personal investing side of things where I should be doing this anyways. I'll get into that later.
Yeah, it's overall though, it's a great stock, and as you see, we've struggled over the last few months finding which are the right undervalued dividend stocks to buy, which are the great companies to buy, and you know what? VYM represents them all, because if you look at their top 10 holdings, it's filled with great undervalued dividend growth stocks that we would be buying individually anyway. So if you're going to increase your allocation for once per week, you might as well do it in a fund that represents how you invest individually too.
That's right. And then my wife, it had to be on a Tuesday because of the banks were closed on a Monday. Therefore, the transfer, there's a whole other frustrating piece there I don't even want to get into. But we bought her 3 shares on a Tuesday, and thank God we did, because the price went down, obviously, again on Tuesday. So I bought my 4 shares on Monday at $106.12, adding $12 in forward income at about a 2.83% yield. We bought her 3 shares, as she always does, at $105.19, adding $9 at 2.85%. So in total, we dropped a little over $740 into VYM, adding $21 in forward income.
Cha-ching, nice job again here. Another fist bump. Keep it moving. All right, so our second stock purchase of the week. This one shouldn't come as a surprise to anybody because it was recently featured on our dividend stock watch list here. We went into the tech sector a little bit. We said that Qualcomm, ticker symbol QCOM, was an undervalued dividend stock to buy at its current metrics.
Bert was jumping in.
Yeah, you know what? I liked it. It made sense.
Cannonball.
Yeah, we watched the video. I reread the statistics, did a little more research on Qualcomm, and I loved it at this price. So on the 11th, we grabbed 2 shares of Qualcomm at $127.03. And then again, before the market kicked back up on Wednesday, the 13th, we added 2 more shares at $125.43. So in total, 4 shares, adding over $500 there for Qualcomm and adding $10.88 total with an average yield of just over 2.15%.
Solid. And Qualcomm's going to be one of those more of the lower yielding, higher dividend growth stocks.
Yeah, a lot of the stocks I've been buying lately are higher yielding, lower growth stocks, and I've always historically been underrepresented in the technology sector. I always talk about that here, but that's why I've been watching Intel. We've grabbed Cisco in the past just to help kind of diversify out of a lot of your legacy dividend stocks and get some growth in there. It's been interesting. So Qualcomm, yeah, 2% yield, nearly double-digit dividend growth rate there. I'm excited to start this opportunity to build a tech stock, and I'll continue buying Qualcomm if it's in the mid-120s and if it continues dipping down further.
Nice. Again, I think that's great company, great stock. If you own Qualcomm, let us know in the comments. Let's get those thumbs up going for Big Bert.
Yeah, so what about you, Lanny? There's a nice little surprise in there, isn't there, for everyone?
So I went towards the Real Estate Investment Trust, or the REITs. For those that don't know, if you haven't checked the blog out, we do have a link in the description here. But both Bert and you and your wife and my wife and I, we do invest in Fundrise as the crowdfunding, real estate platform. So feel free to check the link below. Been investing consistently there, have had great results, but you can still invest in stocks or equities within the REIT industry. So I actually bought Store Capital, STOR is a ticker symbol. A great REIT, has had consistent dividend growth for, I believe, at least 6+ years. Showing signs of undervaluation on that adjusted funds from operations metric. And, I just wanted a little bit more exposure to that real estate investing. And so I bought Store Capital, again, ticker symbol STOR. But I didn't just buy 1, 2, 3, 5, 10 shares. I bought 28 shares at a price of $32.87, deploying $920 in capital, adding $43 in forward income at a yield of about 4.69% on Monday.
Yeah, this wasn't a little nibble here. This was a high impact, adding a huge amount of dividend income right there. Excellent stuff, Lanny.
Store Capital, again, STOR.
Now, was this made in your taxable account or a Roth?
Taxable, actually. Get into that in a little bit. But I had a fun conversation on Twitter because there's one piece to owning a REIT in your taxable account related to the qualified business deduction that may help offset that higher tax you may pay on dividend income.
Yeah, excellent. So yeah, that might be a story for another video, but as always, check out our Twitter feed if you want to go find that conversation too.
But we weren't done here, Bert.
Nope. Last, we both bought the same company here. Lanny made a much larger purchase of this company than me. All right, we mentioned it already. So Verizon was the last company, ticker symbol VZ.
Big red.
So Lanny, what happened with Verizon this week after we did our video talking about them on Tuesday?
Well, that was the funniest part is that, we had this video already planned, and I don't know if somehow it just aligned right, that when the video came out, Verizon was sliding. Verizon was trading in that 53 to 55 range, upwards of even close to 57 over the last year. And Verizon started coming down quite a bit with obviously the rest of the market. And at one point this week, and for those that were lucky, let us know in the comments if you were able to grab Verizon stock, if you bought Verizon stock below $51 per share, because I want to know, I want to congratulate you. That's a heck of a price, I think.
Well, you should congratulate yourself because one of your purchases was below $51 a share.
I actually didn't. Yes, that is true. I did not even mean or intend on that. I promise.
Yeah. So I was close, but Lanny got the lowest price out of the two of us. So I'll start first because I only made one purchase of Verizon. We bought it for my wife. She's been building a position over the last 6 months or so. So we grabbed her 4 more shares at 51.07. So no, we did not cross that 51 threshold. We were close. Added $204.26 to her position and $10.24 of income. But what I like about the price we got it was the yield of on purchase was 5.01%. So we were able to grab it at above the 5% yield.
Hard to grab Verizon at that 5% yield right now. Love it. I bought it in 3 little increments. On Monday, I bought 1 share at $52.93 because, again, we recorded the video over the weekend, so the price was probably, in that $52 to $54 range. Bought it once, 1 share at $52.93, and then I came in on that Tuesday and threw another haymaker for 10 shares at $51.88. And then on Wednesday, just when I couldn't get enough, even though I've crossed the 100 share mark, which was what I wanted for Verizon, I bought 1 more share at $50.94. So in total, I invested $623 and added approximately $30 to $31 in forward income at an average yield of around 4.9%.
Got to correct you. It wasn't 3 small purchases, 2 small purchases, 1 massive purchase of Verizon. So excellent, fantastic
we talk
stuff.
Massive now, but really back in the day, both Bert and I, we used to make $1,000 to $3,000 purchases. But because there's 0 trading fees.
That's what it was. We were trying to minimize the trading fees we had for a stock. So when we were getting charged $6, $7 per trade, you wanted to make the most out of it and put in one big purchase to reduce the cost. Now, to your point, with 0 trade fees, that doesn't matter anymore.
So Bert, let's get a summary from you on how much money you invested this week, how much you added in capital or in dividend income, and what was your overall dividend
All right,
yield?
so in total, between Johnson & Johnson, Verizon, and Qualcomm, we added $1,032.46,
nice.
$29.60 of dividend income with a yield of 2.87%. Again, the yield is dragged down slightly a bit because Qualcomm is that lower yielding stock, but I am very happy with it and couldn't be more excited to add in over $1,000 this last week and nearly $30 of income. So what about you, Lanny?
In total, between Vanguard's VYM, buying the store capital stock, as well as deploying more money and buying Verizon stock, we added $2,283 to the dividend portfolio. And then dividend income impact was actually $94.84 in forward income at an average yield of 4.15%.
Fantastic. Well, I mean, when you had 28 shares of store and 12 shares of Verizon, that is going to get you a nice high yield, and that is excellent excellent stuff, because even though the yield is high, these are great, fantastic growing dividends. So nice job.
So let us know what stocks you bought during the week. Let us know what stocks you're watching this upcoming week. You know, again, we're all on this journey, a personal finance journey together, and we can't wait to continue to share what is happening from us and from you guys.
Subscribe to our channel if you haven't already, and also check out our store, STORE.
Great Christmas present for your loved ones.
Or Hanukkah too, let's not forget.
Or Hanukkah.
I'm kidding, but yes, stocking stuffers to the extreme. All right, everybody, thank you again. This was fantastic. Please give this video a thumbs up if you haven't already.
That was Bert, and this was Lanny from the Dividend Diplomats.
Over and out.